Hello everyone, I'm Dilusha Gamage. Welcome to Ambeon Insights. Transforming businesses, navigating complexities, and building scale across markets. That requires a certain type of leader to do this consistently at high level. And our guest today has spent several decades at the forefront of fast-moving industries, leading large organizations and driving bold decisions and delivering growth across some of the most fast-moving and competitive environments. And now, he is bringing that global expertise to one of Sri Lanka's most respected conglomerate at a time where transformation, innovation, and expansions are more critical than ever. Ladies and gentlemen, our guest today is the Chief Executive Officer of Hemas Holdings PLC, Mr. Ashish Chandra. Ashish, welcome to Ambeon Insights.
Thank you very much, Dilusha.
Ashish, now before joining Hemas, you have been leading in many different industries, especially telecommunications, and not in Sri Lanka, outside Sri Lanka. So would you take us through the most important milestones of your career so far until you join Hemas?
So thank you, Dilusha. First of all, thank you for having me on board here. Talking about my past experience, I bring in about 3 decades of experience, which spans mostly into the telecommunication areas. I worked in telecommunication in India majorly, some Southeast Asian countries like Sri Lanka itself, and a lot of international markets. If I give you a 30,000 feet view of the career that I span from, I bring in a lot of experience into scaling businesses. I bring a lot of experience in digital transformation, leading teams through high growth, high change environments. I started my career, the initial first decade of mine has been into Indian telecommunication service. I joined the time when telecommunication was still getting privatized in India. So I'd been involved with Indian multinationals like Airtel, Reliance, and majorly I was helping these companies creating a landscape of telecommunication in India, because those were the very, very primitive years of telecommunication, especially the mobile and the broadband sector. And I was very closely working with the leadership teams there to create India's first mobile network, broadband network, digital entertainment, digital TV, satellite networks in India. So the entire first decade has been focused on India in developing and defining the telecom landscape in India. Then I moved to one of a large global telecom giant called Vodafone. I spent nearly about 1.5 decades with them, and there my focus was to gain experience of different international operating models across the world. So I got a lot of exposure to what's happening in Europe, what's happening in Africa. I worked in those projects, and then I was also involved in leading the telecommunication technology from the front, understanding a lot what's happening in different landscape, digital transformations and that stuff. And towards the last 1 decade, my focus has been mainly towards expanding my avenues into Southeast Asian markets. Last 5 years, I had been, before joining Hemas, I was heading Airtel in Sri Lanka itself. So that's gave me a huge exposure of the Sri Lankan market on the telecommunication, and I'd been very instrumental in shaping the current landscape in telecommunication in here. But in overall, if you really ask me what I bring on table as an expertise of my last 30 years, that's building businesses of scales with a large complexity, internationalization of businesses, expanding large mergers and acquisitions, new product introduction. Those are some of the things that's what I had been doing the last 3 decades in telecommunication. But within telecommunication, I virtually worked across categories, across departments, so holistic experience of that sector. And I think that's something that now I'm trying to bring to Hemas, and something which is very relevant to Hemas out of this would be the digital transformation, what the company is looking forward to, customer centricity, internationalization of the markets that we are in, introduction of new products, categories, innovations in this market is something which are the areas that I'd been working in the last 3 decades in telecommunication, I think. And that is something that I'm looking at getting into Hemas as I join Hemas.
Wonderful. And Ashish, if I may ask, how is the experience of leading conglomerates or large organizations in India and Sri Lanka? What kind of differences you see?
I think if I again reflect back and see, these are two very different markets in a very different life cycle stages, and hence the kind of leadership skills which are required in these markets are a little different, and they are complementary also to each other. If you look at India, it's a large market, very highly competitive, growing at a very fast pace. Hence, the kind of leadership skills which are required there is bringing scale, thinking scale, fast paced changes which are happening, managing complexities of operations, bringing in more execution excellence, because these are typically the characteristics which is required to succeed in Indian market. Whereas since the time that I've come to Sri Lanka, it's been now 6 years, I've gained experience in Sri Lanka. I think Sri Lanka is a very focused market, very relationship oriented, very long term mutual trust worthy market. Things which creates a balance between performance and people. So very right balance of this. That's something which what Sri Lanka is all about. And I think that's something, if I really reflect back in the last 6 years, that's something I've gained coming to Sri Lanka, because I was operating from a very fast pace, large scale complexity, delivering things at speed, using digital, because India was leading most of the digital transformation in the world. So a lot of things, a lot of businesses in India has been all led through digital. But when I came to Sri Lanka, I realized the value of bringing in the balance, bringing in collaboration more, thinking long-term trust, and bringing more focus on quality of execution rather than only on the speed of execution. So I think it's a blend of both, which is required to run a business, and that's what we're trying to do now in Hemas.
Okay. And I think this is a time where you are building scale for Hemas as well.
Yes.
And I believe when you have identified South Asia and African frontier markets as the markets to expand, specifically into the consumer brands portfolio. So would you give us a brief on how this is happening now, or what kind of steps that you have already taken?
So if you look at, we have already expanded into Bangladesh about a decade back. Our modality of expanding into Bangladesh was mainly a greenfield project, where we took our consumer brands into Bangladesh, created a brand from the scratch, and very happy to say, as we speak, we are the second largest value-added hair oil brand in Bangladesh. So we had been able to establish this over a decade in Bangladesh, and now we are looking at expanding this category into other categories. Like we have recently launched male grooming category. We're looking at more expansion into the beauty and the personal care categories in Bangladesh. So we are learning, and our philosophy has always been that whichever country that we go to, we will focus more on catering to their local needs. So it's not that something that we produce in Sri Lanka, we're going to take it to Bangladesh and going to market it, or take it to Kenya and market it. But we are going to take our expertise from Sri Lanka to those markets, learn about those markets, the need of the local consumer, look at what's the international best practices, marry the two, and create innovation in those markets.
So it's more localized.
So it's more localized. It's like what we are typically saying, we are the people who understand consumer needs, and we are the people who understand how can this be converted into innovative products in those areas. And that's what we're bringing into Bangladesh. So over probably next 2 or 3 years, you'll see new categories getting launched, which are more local categories there. Similarly, we're also looking into East Africa. We have just made it a foray into East Africa, and this is initial years to understand the market. It's very important. We don't want to rush getting into a country and keep taking whatever that we had been doing in Sri Lanka, because that's not what we stand for. So we have made a small foray into East Africa through a learning venture that we have taken over in Kenya. And through that, we're going to learn the market, the tricks of the trade over the next 2 years, grow into, as of now, a learning segment. And then as the right time would be, we will introduce more consumer brands into East Africa. And East Africa is a large market. If you really look at, we're making an entry into Kenya, which is about a 56 million population market, but it gives us an access to nearly a 330 million population of the entire East African market, which is up there. So these are two large focuses for us to grow beyond Sri Lanka.
Okay. And now you mentioned about Kenya and that acquisition of a consumer product company in Kenya. That's something that you have recently done. And could you elaborate on the more like the operational strengths and how the synergies work, and how this new market or the new company is contributing to Hemas portfolio?
Sure. So first, as I was telling you, we should understand, which I explained to you, why we are entering into Kenya. Because we believe that Sri Lanka has a limitation of population which limits the growth that you can do in Sri Lanka and the categories that we are in. Hence, we wanted to expand. So we went into Bangladesh, which offers 170 million more population base to which we can market. And then we wanted to expand into East Africa. And as I said, 330 million more population to add to the current base to which we can cater to. Then when we were looking at the profile of the population in Kenya, it's very different from Sri Lanka. It's a very young population which exists in Kenya. Like, to give you an example, the median age in Sri Lanka is about 34 years, whereas the median age in Kenya is about 19 and a half years. So it is nearly half of it's very young population. Young population which is very ambitious, which is upwardly mobile, 100% English speaking, and very good relationship with the nearby countries. So a good trade relations of these markets. So when we were looking at a young population, what are the categories that we can actually look into to grow there? And the category that we understand better. And one of the category which came up is the learning category. Because that's
something with the Atlas.
Yeah, similar to Atlas. Okay. So that's something that we said is the right category to enter into this particular market, because we know this category. That's a category which is going to grow in Kenya, because the population is growing. It's very young, 19 and a half years as a median age. This is a category to get into. So that's what we initially looked at. And we have now in a process of closing a deal where we'll be acquiring 75% stake in a leading learning company in Kenya. Now, this company is present in multiple categories within the learning segments. And in most of the segments that they are present, they are the market leaders. And they are one of a very old company with more than 6 decades of experience in Kenya. They are the household name in terms of the brand. Very strong brand is something what they own. And that's something what we are buying into when we get into Kenya. So our focus there is going to be taking this company from where it is to the next level by bringing in the expertise of what we are doing in Sri Lanka, and then combine together, bringing the advantage of scale. And our focus is also going to be, currently this company does about 20% of its business through exports into neighboring countries. Our focus is also going to be to not only innovate in the products which already exist, but also to expand our business in the neighboring countries and increase the exports. Yeah, so that's a focus that we are going to bring in. And while we do this, we will continue to learn about East African market. How does the market behave? What the local consumer needs there? And basis those needs which will emerge, we will then innovate other products in our armory, which we have on the consumer side, consumer business, and probably introduce those products into those markets. So that's a long-term plan that we have.
So Kenya is more like a hub that
yes.
you are looking at the
yes.
African markets.
Yes. So that's in my view, that's an entry port for us into East African market.
Wonderful. And let's talk a little bit about the healthcare sector, Ashish. Now, the Thalawathugoda Hospital, Hemas Hospital, there was a huge expansion going on and doubling the capacity. So, how's the progress so far, and has it already finished or near to finishing? How is it so far?
Okay, so before we go there, I think it's also important to understand the current healthcare landscape in Sri Lanka and what we are planning to do there, and how does a Thalawathugoda expansion fits into it, because seeing Thalawathugoda expansion as a standalone won't serve the purpose. So if you look at today, Sri Lanka by 2030 will have 20% of its population living over 60 years of age, which is second oldest population in terms of proportion of the population in Asia after Japan. So we are an aging nation. Okay, aging nation needs a very different kind of a healthcare system compared to the younger countries like I was talking about Kenya. In an aging nation, as people will grow, more and more non-communicable diseases will take over. Things like cardiac problems, diabetic, neuro, nephro problems will become more and more. And these NCDs, what we typically call them as non-communicable diseases, require a very different setup to take care of, because these are typically non-curable diseases. You have to just take care of these, but you can't cure them. So they are long-term treatments which are required to be treated. And you require a very different kind of skill sets which are required there. So our entire focus over the categories that we are into. So we are one of the largest pharma distribution company in Sri Lanka. We are one of the largest pharma manufacturing company in Sri Lanka. Our focus is also that while we are producing medicines for them, we also need to impart care to the people who will be getting into those diseases or will be fighting those diseases for long term. And that's where the hospital comes into picture. Now, our focus is to keep increasing the capacity of the hospital and also to bring in new specialty into the hospital, which does not exist as of now. Today, if you talk about nearly 90% of the hospital beds in our country belongs to Government of Sri Lanka, or it's been done by the public sector, and only 10% is on the private sector. And I think it's a high time that private sector should up its ante and invest more into this to partner with the government to provide next level of healthcare. So our focus has been to build hospitals which is state of art, which brings in new digital technologies like robotic surgeries and other stuff into the country and provide at an affordable price to the citizens in Sri Lanka so that we can better the quality of health in Sri Lanka and altogether. And that's where the Thalwat Hospital came into picture. So our focus is not only to expand Thalwat Hospital, but to increase our capacity to be able to serve Sri Lankan market. So we started this project we announced this project about a year back, and we did a groundbreaking last. As far as the plan is concerned, this hospital is supposed to come alive in 2029, 2030. We started this project. There's a little bit of a delays which are running in this project because of the regulatory approvals which are pending, but we are working with the regulator to bring it up. But as far as the delivery of the project on 29-30, I don't see a challenge. And it's not only Thalwat Goda that we are looking at, we're also looking at expanding into other areas within the hospital sector. So whole idea is to keep increasing the capacity of beds that we have and to keep upgrading the technology that we have for catering to the healthcare needs in Sri Lanka. And I think we are pretty well positioned to do that. Some bit of investment, more investment will come over a period of time into this particular sector for us.
And you're expecting the demand to be this demand is enough for all these expansions that you're looking at?
Yes, absolutely. In fact, if you if you really go to the government hospital, I think they're doing a great job by catering to the service. And I was reading a survey a few days back where Sri Lanka has been among the top 10 in Asia in terms of the healthcare services, the countries which are providing the quality healthcare service. And I think kudos to government for bringing it up to that level. But I think it's responsible when you go to government hospital today, the way the demand is increasing, they are not able to cater to that. Today, if you want to get a major surgery done in any of the government hospital, the waiting list can actually run into 3 to 4 months. Similarly, even for a lot of diagnostic and tests which are there. So there's definitely a large demand which is not being catered by the supply which is currently existing. And hence we see that our investment into this sector is the need of the hour.
Okay. And now, Hemas is primarily driven by consumer brands and healthcare, even though that you are operating in different other sectors as well. So, do you see any structural changes, like in terms of diversification into new markets or expansions? Now, you're talking about Thalawathugoda, and what about other expansions in healthcare and also the consumer?
So, the growth strategy, we just finished off our long range plan exercise where we are trying to define how the Hemas is going to be in the next 5 years. And nearly 2/3 of the growth, which is coming in the next 5 years, actually come from the new innovation products, ventures that we are looking at. So 2/3 of the growth is coming from the new ventures, so the new innovation that we're going to do. Majority of will be led by, to give you example, in healthcare, it is mainly by Morrison, by introducing new molecules, new formulations, taking our Morrison branded products to outside Sri Lanka through an exports orientation. So large growth is going to come on that particular aspect on the healthcare side.
Including manufacturing?
I'm talking about manufacturing only. So this Morrison is mainly manufacturing. Okay. And we are the second largest local manufacturer in the country in Morrison. And now we are focused more on manufacturing our own branded medicines. And as I said, our focus here is again on the diseases that Sri Lanka is currently grappling with, which is mainly cardiac, diabetic, and then so on and so forth as we go further. So our major focus is on Morrison growing the portfolio of medicines that we produce, the novel medicines that we produce, and then focus on expansion into export markets. So that's one. On the HCB side, which is the consumer brand side, our focus is on introducing new categories. Like probably age care is a category which will be very relevant as we go forward in Sri Lanka.
Is it something to do with beauty care?
Yes. So our main focus is mainly, so we currently operate in home care and personal care. And within personal care, our focus is in the beauty care. So going forward, while we will consolidate our business into the home care segment and the personal watch segment, but our growth focus is a lot going to be on the beauty care, which is typically an unmet need of Sri Lanka today. Similarly, our focus will also be on the women hygiene, which is again a very under-penetrated category in Sri Lanka, and a little bit on the baby care. So these are the three categories on which we will be focusing in Sri Lanka. Bangladesh, as we already talked about, we will be focusing on the new categories expansion in Bangladesh. So in a nutshell, in the consumer brands, new category expansion in the areas where we're operating in Sri Lanka or in Bangladesh, which is going to come here. Then not only this, we are also looking at least one new category to be introduced. So currently we're in two categories of business. One is the healthcare business. Another is the consumer brands business of ours. These are two major categories in which we are operational, and we are now evaluating multiple other categories to at least make a foray into one new category into the business.
Something totally new.
Something, I won't say we will get into a completely different category, which will be very away from us. But look, the way we look at as Hemas, what are we good at? So we're good at brand management. We are good at B2C businesses. We are good at distribution. We are good at production of consumer products, all the healthcare products. So we are saying that how can we utilize the advantage of this into a category which is relevant to these? So we'll be bringing in something which will probably at a cusp of these two or little away from these two. But yes, that'll be a new category that we are looking at. And then third big focus for us is internationalization. So a lot investments will come into the markets that we have gone into. We are not looking at entering into any new market beyond East Africa and Bangladesh, but within East Africa and Bangladesh, what is that we can do? And this growth strategy that we are looking at is going to come both from an organic growth and inorganic growth over a period of time. So that's the philosophy that Hema is going to follow in the next 5 years for growth.
And it sounds like there's a lot of requirements for investments. So how do you finance these investments, Ashish?
So currently, we have just as I said, we have chalked out our plan for the next 5 years. Most of the investment will be internally funded by us. We are pretty much a good cash generating company with a strong balance sheet, and we are going to also leverage it a little bit more. Currently, we are leveraged at about minus 20%. So we are going to take it to plus 20 to plus 30s is the gearing ratios that we are looking at as we grow to fund. So nearly I would say about 2/3 of the funding would come from internal, and maybe 1/3 will be something that we will be using debts.
Okay, and that means no equity infusion that you foresee.
So it'll be through
future.
retained earnings. So as I said, when I say it'll be internally generated, we'll reinvest what we are earning.
Wonderful. And now there was a big change in the board recently. How do you manage? How do you working with the new board members who came on board, and what kind of difference you see?
So I think this was a very well planned and articulated change of leadership at the board. It has been planned for quite some time. Okay. Hussain Asaf Ali, who was the chairman for us, has been leading the group for the last 3.5 decades. And he has planned it pretty well, this entire handover. So, and then Vice Chairman, Dr. Anura Ekanaike, was also with the group for more than about a decade. And I think as the group also changes its focus and we get into a more ambitious plan, I think the change is always good at this particular juncture. And now, as I was telling you about the plans, we are getting into a more ambitious phase where we will grow through innovations, which will lead the organic growth. We will grow through inorganic growth. We'll focus more on internationalization. We'll use a lot of digital technologies for productivity enhancements, consumer service kind of things. And I think at this particular juncture, the experiences of Ajit, who has joined as a new chairman, especially from an investment banking background, strategy, growing the companies, will come in pretty handy to us. Similarly, Murtaza, who's now taken over as the vice chairman, brings in the continuity. He has a very deep understanding of the group and the ethos of the family, which are the largest shareholder into Hemas. So he brings in that continuity. So I think it's a right time that because we are changing the gears, and the way we were operating last 10 years for us has been more like resilience, consolidation, ensuring that we go through the crisis that the country has been without being into troubles. And I think that the earlier board has done a fantastic job of doing that. And now, as we change gears into the growth avenues, I think this change of board will be very relevant. And as a CEO, it's my responsibility to work very closely with the board, the chairman, the vice chairman, to convert the strategic intent of the board into execution. So that's something we're doing, and I'm very happy. The board has taken over last 6 months now. It's nearly about 6 months, and I think we have great working relations. And then we are taking this. We just closed the LRP exercise with the board, with the new board, which is very relevant. As the new board takes over, they should own the long range plan which the company is giving. So I'm pretty happy with the way the things have shaped up over a period of time.
And the family is taking a little bit of back foot at the moment. And
I wouldn't say that. Really, I wouldn't say that. The family has always been the guiding factor, wherein they bring in the values, culture that we drive. There's a family philosophy in what are the segments that we will enter, we will not enter. I think they continue to guide the board, but the family has never been intervening into the day-to-day operation, and they continue to do that. That's more a guidance which comes from them, which through board, and which a management executes. But it's still, I would say, very independent and very progressive.
Okay. And Ashish, now you were talking about the 5-year plan for Hemas. And if I may ask, what would be the most critical success factors for Hemas to achieve that within the next 5 years? What would it be?
As I was telling you, our strategy is 3-pronged. One is organically growing the business that we are into. And there we will be using innovations, new categories as a pivot for us. So whatever businesses that we are in, how can we expand by doing innovations in those, introduce new products, new categories. So that's one area. Second area is identifying new opportunities within Sri Lanka, which ideally would be in inorganic or organic ways of expanding into that, which could be adjacent to the categories that we're already in, or probably getting into a completely new category where we bring in the expertise that Hemas has. And third is internationalization of our business. So these are the 3 pillars on which we will be working on. Internationalization, both from doing business, acquiring business internationally, as we talked about Kenya and we talked about Bangladesh, and also focus on exports. So getting more dollar earnings from the businesses that we already have. So these are 3 core pillars on which we will be working as we go forward in the LRP side. And I think to enable this, what we're doing a lot of investment into the technology side of us, so which is building the entire digital core, building the AI capabilities within the group. So huge investments happening on that particular aspect, which will also help us standardize our systems and making them more efficient. And second large investment that we're doing is actually on the capability building side of this, because to run these business, to go to the next level, we need people who will be able to take it. So a huge investment over last 1 year and probably will continue for the next 3 to 4 years is attracting talent from outside and investing into the existing talent to take to the next level, which will be able to deliver this growth that we're talking about.
And by doing all these, what are the biggest challenges or risks you see?
So growth always comes with risk. Okay, there's no growth which will not come with risk. So we are doing this in a we're creating a large governance structures around it. So that's one. So whatever, as I said, 2/3 of our progress is going to come from entering into either new products, categories, businesses, geographies that we are talking about. And it requires a huge level of governance platform. So we are investing a lot in doing the governance of these products. So there's a board level governance, there's a business unit level governance, there's a group level governance, and multiple level of governance. But we are also cognizant that too much of governance should not also slow down the growth. So there has to be, it shouldn't kill the innovation. So we have to bring in a balance between the governance and the growth, which has to come, the speed at which the growth has to come. So that's the right balance. And as I said, other risk that we, if you really ask me, the risk I see is of people. It's very important to acquire and develop people at a very large speed. Because if we don't have the right resources, then all this plan can't come through. Third, there's a large macroeconomic, the macroeconomic environment remains volatile. We are keeping a close watch on that, and because most of our growth plan is going to be in the next 4 to 5 years. And all the emerging macroeconomic nuances of what's happening in the world will have a role to play on that. But we are keeping a very close eye to say that how can we navigate through this.
And last but not least, what is your message for the shareholders of Hemas?
So I would say Hemas is entering into a very exciting phase if you really look at. Hemas has been growing at it has been a very stable company over the past decades, has been solid performer in their own categories. We are entering into a much more exciting phase as we go by, and large investments being planned organically, inorganically, locally, internationally, in the categories that we are, in the categories that we are not, is going to make this a very exciting phase. We are completely committed, as we also declared in our annual reports, our ambitions of more than 100 million investment over the next few years to grow this from where we are. Huge focus on internationalization, huge focus on innovations, huge focus on digital will come through, and we will ensure that when we go through this phase, the shareholder values and shareholder returns are protected. And the way we are looking at is whatever investment that we are going to do, the new investment that we are doing in a completely new sector, in the completely new markets, will fuel the growth for a long-term thing. But the medium-term thing, which is from now to probably next 5 years, is still going to be fueled by expansion of the existing businesses, whatever investment they're doing. So it's much more safer compared to the investment. So we are going to maintain a very right balance at any moment of time, what we are investing into the existing business, which will fuel the medium-term growth, and what we are investing in a long-term, which will fuel the which is new sectors and the new areas, which will fuel the long-term. And that's we are restricting to nearly about 20-25% of the total investments. So we are managing the risk pretty well. We will be managing the deliveries of these things, and I think it's a very exciting time for shareholders.
Wonderful. And Ashish, I wish you all the very best for you and to Hemas to go for greater heights from here to many more years to come forward.
Thank you
very much for joining with us, Ashish, and thank you for sharing your insights with us.
Thank you very much.
Thank you for watching Ambeon Insights. We will be back soon with another exciting episode.